What's going on, YouTube? Today I'm bringing you a brand new ticker on my watch list that I think is going to explode in the very near future. And the reason why is the infrastructure bill. So, Joe Biden did just recently pass this bill, and I'm not going to get into the politics of it, but I will tell you that he is focused on America's public transit infrastructure, and he thinks it's inadequate. So, before I get any further into this, let's break into my intro. What's up, YouTube? My name is Uncle Smokey, and this is Uncle Smokey's Stock Trades. And before I start this video, I would like to say, I am not a financial advisor, and this is not financial advice. So please take what I say with a grain of salt, and do your own DD.
We are on a mission to replace all vehicles to electric. I would like to use this opportunity to remind everyone Arvl is unique. It is a platform technology business. We have invested in enabling technologies, software, components, materials, robotics, and microfactories that provide a strong competitive advantages for us. We are doing things that have never been done before and expect our powerful technologies will change the fundamentals of automotive industry. These transformative technologies are coming together in our first microfactories, and we like what we see. Our first bus to be used for validation has been completed, which is an important milestone for the company, and I can share it is a remarkable product.
So Joe Biden passed the infrastructure bill, and again, like I said, I'm not going to get into the politics of it, but I am going to point out a couple of key factors that are going to tell you why I want to look at this ticker. And before I go any further, let's tell you what the ticker is. The ticker is ARVL. Arvl Ltd. They are a company that makes EV buses, vans, and cars. They are a newer company, a SPAC, and I think they're going to be making waves here in the very near future. So let's go ahead and crack into why I think that. So, America's public transit infrastructure is inadequate, with a multi-billion-dollar repair backlog representing more than 24,000 buses that are in need of replacement. Yes, there's words in between there, but let's talk about the important stuff. And then also there has been a bipartisan infrastructure deal to provide $89.9 billion in guaranteed funding for public transit over the next 5 years. And that is to replace thousands of deficient vehicles, including buses, with clean, zero-emission vehicles and improve accessibility for the elderly and people with disabilities. There was also a part inside the infrastructure bill that talked about reduce emissions through our airports, ports, and waterways. And yes, I understand they're probably talking about more airplanes and boats and things like that, but you also got to keep in mind that there are a lot of transport vehicles that transport people from their parking areas through the airports. Larger airports have these shuttles, things like that. And those are all diesel engines right now. Also, you're talking about like the luggage carriers. These can be converted over to more EV vehicles. And I definitely think this company that we're talking about here has the ability to do so. So they want to reduce the congestion and emissions near ports and airports and drive electrification and other low carbon technologies. So basically not just planes and boats. They're talking the overall aspect of the ports and the waterways. Now, here's the reason why I think that Arvl could be a great candidate for the government contracting of all of this, because Arvl has the ability to not only build buses and cargo vans and even cars, but they have the ability to scale them to whatever size that is needed. So they're not just subject to one base platform. They start with the platform and they build off of it. So basically what that means is, so UPS, they've got a contract with UPS right now, and it is not a binding contract, which means the UPS can pull out at any time. However, I highly doubt they would, because if you take a look at this beautiful van that they've designed with Arvl that's already been squared away, you would see why they would not want to be pulling out at this present moment in time. However, they could upsize these vans to be not only the smaller inner city vans, but the larger long haul vans. Also, their buses. Their buses are already currently being built, I believe, in the Charlotte area, North Carolina, where they're very excited for that factory there, and they use micro factories. That's another key advantage to this company compared to the gigafactories a lot of companies use. They're using micro factories, and a micro factory, it has the ability to upscale in a downscale way. So you're going to build multiple micro factories, which will create many, many jobs throughout an area, throughout the country, and ultimately throughout the world. So Say Chicago. Chicago has an Uber port. They also have a UPS port, FedEx port. They have multiple different ports there. What this company's designed to do is they're designed to build a microfactory to help adapt to those areas. So Chicago's a large city. They might have 2 or 3 microfactories to build different products. They might need a car plant, a bus plant, and a van plant there. Whereas if they go south more towards Cleveland, they may only need a van plant. And that's where they would build a microfactory there. And then maybe halfway around the world, and call it Japan, they need a bus plant and a van plant. They could put 2 plants there, maybe even on different sections of the island. So a microfactory is great because it also, like I said, not only enables multiple factories in multiple areas, but many, many jobs. Also reducing the emissions that way and the economical footprint that way, not needing thousands of machines to build one vehicle. They can do it with only mere hundreds. So I think that's also another advantage to this where since we are looking to shrink our economic footprint and to make it a more economic and friendly way of doing things, we'd want to use a company that has the ability to do that. Not only that, they are also using materials that are, their raw materials are recyclable. So that means their shavings and things like that that get cut off that they don't use. So they're like their fiberglass mold. It's not made out of fiberglass, it's made out of something else, like a pelletized material. When they shave the excess off, they are able to melt that back down, repelletize it, and use it in the next one. So it again makes it even more eco-friendly. There's a lot to know about this company, and I've been diving into it all weekend long, and I'm trying to give you some of the most key information to help you understand why I think that they're going to be a huge, huge player in the game. So also Uber. Uber has got a small contract with them. Actually, I think it's probably a big contract. They're currently designing a car for Uber, utilizing Uber's technology as far as their ability to route and navigate, but utilizing the EV from Arvl. And in fact, I'll pop a couple of little pictures up here so you can see what the interior and exterior is going to be looking like, allowing for full transparent glass on top for customer rider experience, a better experience. Also, sorry, I'm jamming it all in really quick. This could also help the mail industry. Mail cars are very inefficient. They have these older mail cars out there all over the country, and this company, their vans could easily replace those, since again they're able to be scaled up or down. Another thing that this could help would be inner city buses. Like I had said, Charlotte, they're already very, very hyped about this. They have a location there. This could be happening all around our country. Also, the airports, they utilize buses there as shuttles. So just keep that in mind. This company has a lot to offer. And again, there's already 2 factories here. Now let's move on to the downsides. Why is this stock so cheap? It's currently trading at $10.50. Not too long ago, it was trading at almost $20. Here is why. First and foremost, they just had their earnings come out, I believe, on the 8th. They were not hot, and you couldn't expect them to be. This is a startup SPAC company. They just listed. They IPO'd about a year and a half ago, I believe, in February of 2020. So almost 2 years ago. And when they first came out, they gave their financial forecasts, and they probably shouldn't have done that. Not many companies in the very beginning will give a financial forecast, and what they had to do is, that was one of the big things in their earnings, is they withdrew their financial forecast because they currently don't know where the revenues are going to be at, and that's not a bad thing. We have to think about the time we're in right now. The reason why they have to withdraw their financial forecast is because they can't, number one, get a full supply. They can't fully staff a location. They can't do things like that because of coronavirus. They are currently building. They have the vans in the works. They were started to build this quarter, Q4 of this year, for UPS. And from the sounds of it, they have other, again, non-binding contracts with other companies. So it sounds to me like that there's big things in the works. And as soon as the supply chain issues free up a little bit, all of this can rapidly progress. Also, they did have to do away with one of the micro factories they wanted to build. They had to push it back, not do away, I'm sorry, push it back some. Again, supply chain issues and the inability to fully staff a factory is going to not allow them to have the capital to build right away. So right now they're building factories on capital. So as they build capital, they'll build factories. The other thing that's driving their price down right now is, unfortunately, on the 18th, they did do a public follow-on offering. Now, a public follow-on offering, or a PFO, is something that an IPO does soon after they open up. Basically meaning they either A, want to shrink their debt, or they need to earn more capital to be able to continue their production, which absolutely, they definitely need to do so. So they did do that. It started out as just 25 million ordinary shares, and then they moved it up to 32.3 million ordinary shares at the public offering price of $9.50. So that's another reason why it kind of drove the price down on the 18th. Now, again, this is nothing really much to worry about. This stock is going to be absolutely just fine, in my opinion. So, with that being said, some of the good things that did happen with the earnings. They did say that they are going to do all of their battery assembly in-house. So they're not going to do that out of house. It's going to save them a lot of money in the long run. Immediately up front, it might be a little bit more of an expenditure having to outfit the factories for that. But again, in the end run, that is going to be a lesser of an expense. Also, they were talking about their logistics. They're going to do logistics in-house. So again, one of those things that if they keep sending it out to do all of that stuff, it is going to cost them more money in the end. In the beginning, it's going to be a bigger expense. However, call it 2 years down the road, that all could be completely wiped, and then it is being more profitable than it is detrimental to the overall revenue of the company. Yeah, those are basic reasons why it did horrible, but at the same time, they're giving you good reasons on why it's going to do better in the near future. Also, keep in mind of those partnerships they do have, and they're continuing to build. Some of the monies that they had spent throughout the last couple of quarters have been on sales, have been on R&D, and of course, it has been on product. And when product prices go up, you're going to expect for the cost, when the cost of goods go up, the cost of doing business is going to go up. So that's that. With that being all said, I think we need to go ahead and look at the stock and the stuff we really like to look at, the nitty-gritties of what we want to see. All right, let's crack into the stock. So as you can see right here, this is the 8th. This is when the earnings came out, and you could see it was absolutely pummeled on. There was a major drop-off. Now, this could have been a lot of shorting, but this could also have been a major sell-off. And I can understand if it was either way, really. Now, again, we had talked about this already. The earnings weren't as bad as it sounds. With coronavirus stepping in, it makes everything worse. And it was no exception with this company. So I'm taking this earnings with a grain of salt, and I'm looking into the future and seeing what this company really has to offer. Unfortunately, that is not how short sellers and the toots look at it. So after this drop-off, you will notice that we had another sell-off here during the very next day, to be expected because they do get beat down when earnings are bad. Now, with that being said, shortly after, it did make a small comeback and traded sideways for a couple of days with a slight downtrend, making lower lows and lower highs. But then on this day here, which was the 17th in the after hours, basically pre-market, the 18th, they announced their dilution. They were going to dilute the stock 25 million shares, and then shortly after that, the next day, they did correct it and say they were going to do it at 32.3 million shares. So it did take two major hits 2 days in a row, bringing it all the way down to $9.71. Now, that is not the lowest level it has ever traded at. The lowest mark it has ever been at was $9.30, which you can see over here on the 1-day chart. If I zoom way out, you can see it on the 1-day chart that $9.30 was the lowest it's ever hit in the history of this SPAC. Now, it also did have a major run up there in January and February of 2020, and then got beat down again. This was a mixture between shorting, because this was, I would assume, probably at this time, what they were considering a short squeeze, even though it really wasn't. And hedge funds took over and they started shorting the hell out of the stock. Now it may be a short squeeze, which we'll get into a little bit later. Now, I don't have any major technical lines drawn up. I do have all of the support and resistance. But I didn't draw up any triangles or wedges or this or that. And I generally don't because they're almost irrelevant. Yes, I do draw them up on day trade and swing trade stocks, but this is a stock that I am planning on going very, very long on. So I'm not too concerned about when its breakouts are going to be and things like that. I just think that I'm at a level right now in this stock that this is a good buying point. And you can see that by my lines of support and resistance. It's only got a couple more lines down below this level here, and that would be the lowest it's ever been in the history of this stock. And if history repeats itself, it is currently at a bounce point. $10.50 is a respectable level. In fact, right over here was, let's zoom in, boop, $10. We're in the $10 area. So as you can tell, it bounced off 970. It's hitting that $10 mark again. And the last time it was at a $10 mark, it rode. It rode hard. It drove clear to $3 or $37.18 before, again, shorts took over and started bringing it back down. And now it's the only reason why it's even down this far is because of its current events. Now, I am not saying that it can't go down any further. It most definitely can. When dilution happens, when they do an offering and they start to dilute the stock, generally you'll see downtrends for a couple of days. And what you're looking for is for them to say the dilution has been completed. Once that happens, you can almost always expect a rebound. Now, also keep in mind the infrastructure bill was just signed. So there's a really strong chance that you could start to see a rebound right now before the dilution even begins, before they even start to dump the dilution into the stock. Because people are going to start to see that this company has a lot of real world use in our country right here, right now. And it looks like our government's going to want to push for companies like this to really, really grow at a very exponential rate. Now, with that being said, let's go look at the options chain real quick. Let's see what we got going on over here. So currently, December, let's go to November 26th. That's next week. They do have weekly options in this current stock. And so for the $11 strike, it looks like 35 cents per share, which would mean it would be $35 to buy this contract for each contract. And remember, an options contract is giving you the right, not the obligation, to exercise that before the expiration date, which would be next Friday. Now, if you're feeling very bullish in this stock and you think it's going to have a bounce come Monday, Tuesday, and you're willing to gamble a little bit, $35 isn't a whole lot of money to throw down on a single options contract. And if this thing does make a nice reverse and trades up for a couple of days, this could print very well for you. So that's one option. Me personally, I'm going to be playing way further out of expiration, and I'm going to be playing probably a little out of the money and a little close to the money at the same exact time. So let's go ahead and look down here where I'm looking. I am looking for March of 2022, and I am looking at both right here at the $12.50 strike for $1.60 per contract. That's $160 per contract, I'm sorry. And then I'm also looking for the same exact time frame, the $25 strike. And that's at 35 cents per share, which would be $35 per contract. Reason why I'm looking at the $25 strike for this far out is because of what the earnings report said. Their buses are due to start build Q2 2022. That's then. You could really start seeing some price movement then. When you start seeing the buses being produced and you start seeing contracts coming in for buses through the cities, through the government, through the transit departments, through the airports and all that, when you start seeing that kind of stuff, you're talking crazy numbers. And also, it's so far out of an expiration that theta isn't going to even kick in for a very long time. So I could sit here and just let this thing do nothing forever. Now, again, volatility can spike up, and I could start printing on this early, and of course, I'll cash out. So always keep that in mind. When you're playing options, you want to keep your eye on the ball. You want to know what's happening. Set yourself some alerts so you know what's going on. Next thing we want to go to would normally be Ortex, but they don't have any Ortex data on this one, so we're going to go ahead on over here to Fintel. Fintel, let's go to the top. Fintel is showing that their short interest is 15,160,340 shares, according to the NASDAQ. That's a short, the days to cover is at 1.13 days, and that's a short interest percent of the free float of 8.28%. They are currently 78.96 out of 100. That is 170 out of 5,500 stocks on the short squeeze list that Fintel judges. They currently have 750,000 shares available to be shorted from a leading prime brokerage. I do feel that leading prime brokerage is going to be one of your big three. Could be Fidelity, could be Citadel, could be Virtue. And then your short borrow fee rate is currently sitting at 4.32%, which is actually kind of high. It's not your astronomical progs or your GMEs and your AMCs when they get up there, but it is still kind of high. Anything over 1% is a little bit out of the ordinary for most stocks, most strong play stocks. Now, I'm going to be considering this a momentum stock once it starts moving. Right now, this is a speculative stock, but again, I'm going super long on this. I think this could really take me into the future in the next 2 to 5 years. So, yeah. Last thing we want to look at down here, short sale volume. FINRA. FINRA generally makes up about half of the overall volume of the security that day. It did not this time because it was like 33 million, 34 million in the overall volume. But not to worry, they were still showing astronomical amounts of shorting, well over half through the dark pools. Overall, over half through all of these, and that's not all of them. If you were to go and look at all of the different exchanges, see all the different shorting numbers, I'm sure this would play out to be a completely different number. But the one thing I want you to notice is look at the last several days, actually a couple of weeks, I guess, since the 8th, you'll notice that there has been a lot of heavy shorting coming in from the short sellers. So I will have to say that I think this upcoming update from the NASDAQ is going to change this number up here at the top. Whew, sorry about that. I had to go handle the dogs. So, with all of that being said, I think we covered all of the basic information here. I want to go over to Twitter real quick and just show you what Arvl's got going on. So on the 18th, they did say UK's Arvl unveils pre-production of prototype electric buses. You can go to Reuters and read their article about it. And then on the 15th, that shows we applaud the White House for signing the game-changing bipartisan infrastructure deal today and appreciate the support of our North American HQ congresswomen and senators. So, they are also very excited about the infrastructure bill and believe that this could definitely benefit them in the very near future. So I am bullish on this stock, guys. I'm very bullish on this stock. And I think you guys should be too. Now, keep this in mind. I'm taking this as a warning. I'm not saying that the downtrend is over. This could most definitely see more downside. It does have dilution in the forefront. They are currently not making any money. They do have contracts. They do have vehicles being made, but they have not made much in the lines of revenue yet. But I do think that they are trying very hard to do so. So with that being said, like, subscribe, make sure you comment in the algorithms, comment for the algorithms below, and do what it is you got to do to get these videos spread out to the airwaves. Make sure you're sharing these with friends and family. If anybody wants to make a little extra money, the stock market is definitely a great way to do that. But remember, it is the world's largest casino. Be ready to lose everything you invest. Peace.